Mahindra Mahindra took a one-time hit of nearly 600 crores in the third quarter. The auto to agri giant saw its bottom line drop by more than 70%. But the management hopes that the sharp slowdown in sales will ebb in the coming months on the back of healthy growth in the rural areas. Forum Bhatt is here to take us through the details. Forum, how did the numbers stack up?
Well, so the numbers operationally were fairly in line, but it was, however, the net profit which was clearly a miss this time around. So the revenue was down 6% at about 12,120 crore. Net profit was down 73% at about 380 crore rupees. EBITDA was up 5% and margins were at 14.8% versus 13.2% a year ago. Now, the miss in the profits was basically on account of an exceptional item which the company reported. It was an exceptional loss of about 554 crore rupees. Now, this pertained to provision for impairment of investments. Now, remember, this time around last year, the company reported an exceptional gain, which is why the miss in profit seems much more. Now, other than that, the decline in volumes was also 7% this time, which impacted the top line for the company. Passenger vehicle category reported a flattish performance this time around, and commercial vehicle category continues to remain under pain as the company reported a 17.3% decline on that front. Other than that, the margins, however, were aided on account of lower cost and increase in realizations this time around. Now, management also threw some light on what's happening in the sector and what's expected going forward. Now, they say that supportive and coordinated interplay between the monetary and fiscal policy will be of paramount importance for the revival of growth going forward. Now, they say that market sentiment, however, was boosted on account of accommodative monetary policy, US-China trade deal and diminished uncertainties around Brexit. Now, they believe that both auto and tractor industry has shown some signs of reversal in trends. If you see, there has been some moderation in the double-digit degrowth which the sector had witnessed earlier. Now, the key reasons for this being good monsoon, an uptick in the festive season demand, improved liquidity, new launches and special schemes which were offered by the OEMs. So yeah, so all in all, a fairly good quarter as far as the operational front is concerned, but net profit was clearly a miss this time.
I think this, I remember Escorts reacting duly to its set of numbers as well, because it was a strong performance, better than marginally estimated. So I think both the large tractor makers seem to have done a few things right in the quarter. Yeah,
well, definitely, Neeraj. So if you compare with Escorts, the performance was much better than what Mahindra had reported. However, on the tractor business front, Escorts reported a 2.5% decline in volumes, while the volume decline for Mahindra stood at about 6%.
Okay.
Now, if you look at the QOQ trends, there was an improvement on that front for both the players. However, HSBC expects a low single-digit growth for the tractor industry to continue in the fourth quarter this fiscal. They say that volume recovery would happen only from FY21.
Okay, so that's the nutshell. I mean, but tractor companies seem to have done reasonably okay, but the outlook for tractor volumes doesn't seem to be
it's
strong.
Still subdued as far as this fiscal is concerned. We can expect some revival from the next year maybe.
Well, let's wait and watch if indeed, the Forum, thanks so much for putting that into perspective. If indeed rural income does pick up, which is showing some signs, and there is rural inflation, and the pricing power for the farmer comes back, you never know. I think there was a note that I read from Spark Capital which spoke about how there is a one-on-one correlation to what happens to rural inflation and the subsequent years tractor sales. Now let's wait and watch if FY21 brings about an uptick in those numbers.